Good day everyone, especially to our Professor Dr. Arlie M. Molo. Good day po, Doc. I am Mrs. Mary Jan Manalon Fahilago from Alfredo P. Navarrete Memorial School. My report is about budget planning. What is budget? When you hear the word budget, what comes into your mind? Budget, according to Merriam Dictionary, is the amount of money that is available for, required for, or assigned to a particular purpose. It is a statement containing the list of commitments by a body to provide the required resources with a given monetary value to perform the activities that are expected to attain a given objective. In an organization, the budget is the final act of commitment to the strategies it has set forth to do in the future in order to achieve its desired strategic objectives. Here are the prerequisites before arriving at an optimal budget. First, a sound organizational strategic plan that considers the available funds that can be provided at the time these are needed. Next, relevance of the budgeted activities to the attainment of the strategic objectives. Outputs of the budgeted activities can be objectively measured and assessed, and revenues from activities to be undertaken can be predicted with acceptable degree of accuracy. Now let's proceed to strategic planning cycle vis-a-vis budget cycle. Strategic planning cycle includes situation analysis, strategic plans, under this setting objectives and developing activities. Next, budgeting, action planning, implementation, monitoring and evaluation, and documentation. For budget cycle, under budgeting, budget preparation, budget approval, budget execution, recording and reporting, and monitoring and evaluation. Now let's proceed to the conceptual framework to budget planning in an organization. Strategic plan of the organization, budget policies, capital budget, program and or departmental plan, medium-term budget plan, example 3 to 5 years, operational plan, annual budget plan. Next are the principles underlying budget planning and management. First, budget as a control instrument of management. Resource allocation, priority setting and spending plan, financial control planning, containment of expenditure, financial forecast. Next, improving efficiency and effectiveness of organizational resources or activities. And the last is communication between different levels or units of organization and stakeholders. Now let's proceed to the types of budget. First is income and expenditure budget. This sets out anticipated or the recurring costs of the institutions and shows the source of funds to cover them. Next, capital budget. Budget for capital projects and acquisition of equipment or fixed assets. And the third one is cash budget or cash flow forecast. This aims to monitor the availability of cash, whether sufficient cash is available in the bank to meet the payments needs as they arise. Next principle is approaches to budgeting or the process of budget formulation. This increased the amount of budget based on the budget of the previous year. Under approaches to budgeting, next is zero-based budgeting. Considers the previous year's budget as zero. Next approach is budgeting systems or budget allocation structure. Under this, line item budgeting. This is the distribution of expenditure item by item to make it possible to control budget expenditure. For the pros or the positive or the affirmative side, expenditure list and amount is clear and accurate. Clear budget and accounting responsibility. For the cons, inflexible, or this is the negative side, hard to deal with unexpected incidents for changing needs. Next budgeting system is performance-based budget. Budget allocation based on outputs, not outcomes. Pros, or the affirmative side, it helps stakeholders understand what organization is doing and why. Can better establish long-term plans and use organizational resources more flexibly. For the cons, setting performance is tough. Quality of performance indicator, consensus on performance measure, track measure performance, etc. Now let's move on to the program operational budget planning methods. First is create a chart of accounts for revenue and expense with corresponding account codes. Examples, revenue accounts and expense accounts. For expense accounts, this includes personal services like salaries, hazard pay, Christmas bonus, and etc. Second, review budget guidelines and policies that may set the environment for budget planning. Note the budget amount limits imposed under the budget guidelines. Third, identify sources of revenues and develop forecasts for the period covered. Note if the use of revenues for its source has restrictions. For each activity identified in the operational plan, compute budgetary requirements specifically needed to implement the activity. These requirements should consider personal MOOE and finance expenses for each activity. And for the last, I have here an example of operational budget planning worksheet. I'm not going to read this because you can also see this on the slide. And for my reflection, may I read to you this? In school, budget helps the school head and staff to develop plans for future syllabus, instructional procedures, guidance services, and pupil activities, as it helps in allocating expended funds for labor, facilities and administration programs, activities, and projects. That ends my report. Thank you. Stay safe, everyone. God bless us all.